Well, just last week, the Federal Reserve lowered a key interest rate by 1/4 point. So what does that mean for the local real estate market? Here to help us answer that question is real estate agent Christine Finch Oleynick, and she's joining us today in Conversation Connecticut. Good to see you.
Good to see you. Thank you for having me.
First of all, let's get an overall picture of the local real estate market. How are things looking this fall?
So they're about the same as they were last year. Inventory for single family homes, there's about 1,200 homes on the market in Fairfield County. Literally the same as this time last year. Days on market are a little bit better. It's 30 days compared to 36 last year. So we're in about the same, although the mortgage rates are a bit better than they were this time last year.
But you were telling me a moment ago, the prices have changed.
They have. Prices have gone up 8.3% over last year.
So let's talk about the impact of the Federal Reserve's decision and how that is reflected in mortgage rates.
So mortgage rates have dropped to the lowest that they've been all year. But this wasn't a sudden drop. They've been dropping for the last few weeks in anticipation of the announcement. So while in January they were 7%, they're now about 6.3%.
So let's talk about that drop and what it means on for a monthly payment.
Right.
Let's say it's a $500,000 mortgage.
So for a $500,000 home with 20% down, the difference of a 7% rate and a 6.3% rate is a couple $100 a month, which is pretty significant over the lifetime of the loan.
When you first hear that, especially if you're new to buying homes, you think, oh, a couple $100. What's the, but you go out 30 years.
Absolutely. That's a lot of money.
Okay, what is your best advice to get a really good mortgage?
So that's a great question. There's several things that you can do. You want to shop around. You want to talk to several lenders and get the best loan for you. You also may want to consider an adjustable rate mortgage or a 15-year mortgage. Those are both in the 5% range. You want to also make sure that your credit score is as good as it can possibly be, and perhaps consider putting down a larger down payment, which will naturally lower your monthly payments.
When you talk about the ARMs and the 5s, I mean, historically, that's a good mortgage.
That is a good mortgage, absolutely.
We got spoiled with
the
2 and the 3%.
Absolutely. So nationally and over the last 50 years, 8% is the norm.
What about refinancing?
So if you can get a rate 1% or better, then yes, now's a good time to do so.
And if you are trying to sell your house, this has been something that it's been a seller's market, really. So
it has.
How is this, you know, the lower rates impacting sellers?
So it does impact sellers. It's not going to be a sudden surge as the rates have been going down slowly over the last few weeks, but more buyers, more competition, it certainly helps with the sellers as well.
Okay, well, it sounds like things are loosening up a little bit.
A little bit.
All right, and other factors impacting mortgage rates, because we all think it's tied to the Fed, but there's a lot of...
There's a lot that's involved, such as the economy, inflation, the jobs market, and mortgage rates are closely tied to the 10-year Treasury.
All right, all things to keep an eye on if you are thinking about buying or selling a house.
Absolutely.
All right, Christine Finch Oleynick from Keller Williams. Thank you.
Thank you so much.